So, ladies and gentlemen, it's an excellent day today. Why? Because we start a new venture. What is this new venture? The online discussion sessions. We started with a newsletter, which is going to be strengthened and it's going to be quite important in our communication. But we have now the online discussion session. I have to say, always the quality of teaching and the quality of research were and have been and are still of most important, of paramount importance. However, we want to further strengthen, or we want to create the relationship of our graduates, and we consider them equally important. That's why we start this. We have 4,000 graduates on shipping trade and finance, energy trade and finance, transport trade and finance, logistics trade and finance, the same course, actually, which both were renamed. And all these people, the 4,000 people, come from over 150 countries. I don't know very many institutions that can claim this. They have graduates from over 1,500 countries. But the other thing is this, a large percentage of them are regionally very well known. And a large percentage, approximately 25%, are internationally known. We have created in the past the triennial meetings in Athens, the biennial meeting in London, and we have organized the Hamburg meeting and also other meetings. Why? Face to face, because you see each other, you meet each other. Apart from the dialogue, which is extremely important, is the strengthening, the bonding which is created, and we want to continue this. Let me start because I don't want to expand on this. We will have other opportunities. What we are going now to have, we are going to have the discussion and the panelists. There are 5 panelists. I would say of international standards and reputation. I'm not going to refer to their CV. If you click on their names in the newsletter, you will find their detailed CVs. First is, I'm going through this alphabetically. First is Arjun Batra. Arjun is the Group Managing Director of Drury Shipping Consultants. His topic is the end of globalization. He joined the MSc in Shipping Trade and Finance in 1987. Then George Karageorgiou. He is the President and CEO of the Olympic Shipping and Management, which belongs to the Onassis Group. His topic, new ways of doing business. He joined the course, the Shipping Trade and Finance course, in 1987 as well. His son is a current outgoing student. His name is Kimon. Asaf Malamud. Asaf is the Chief Executive Officer of Port Dragon Bulk. It's part of the Port Line Group, which is based in Hong Kong. And he's now in Hong Kong. His topic is geopolitics, the case of Hong Kong. The next one is Jay Zhu. He's the Deputy Managing Director of Welton Hatch Holdings Limited, based in Shanghai. His topic is LNG, a new chapter in China. His younger brother is also a graduate, and his name is Feng, and he came to us in 2003. Urvashi Zutshi is former managing director of ABN AMRO, very well-known banker. Her topic, changing landscape of banking. She joined the MSc in Shipping, Trade and Finance in 1995. We are going to start now with a presentation of Arjun. And I'm going to raise a question at the end, and he replies briefly, and then we will go to the next one. So, Arjun.
Good evening, friends and alumni. Good evening from Singapore. I know it's midday somewhere in the UK. The topic I have chosen to discuss is the end of globalization. My hypothesis really is globalization has killed globalization. So we're coming to the end of what this golden era of globalization. Globalization, as you know, we could discuss and say it started way back when international trade started. But the period really I'm interested in, or most people refer to globalization, really is post-1990s, WTO, China joining the WTO 2001. And this period really has been quite incredible, and really it's a major part of my working life. So I've witnessed most of it, and I'm sure most of you have. It's been absolutely incredible. Greater free trade, movement of labor, huge GDP growths in most parts of the world, huge increase of seaborne trade, China growing to be the factory of the world, double-digit growth for nearly 15, 20 years. So it's been an incredible 20 years if you look back at it, for global trade, for global growth, for the change of the economy globally, and shipping, of course. That's the background I am in. However, this globalization also has had some very, very negative effects, especially in the more advanced economies like the US and parts of Europe. Huge unemployment, well, the deindustrialization as factories moved to Asia, to China, been huge deindustrialization, causing unemployment. Even those who are employed, more underemployment, huge disparity of wages and wealth. And all of this, and and huge trade deficits, balance of trade, and all of this has been causing concern across the board. So well before the start of the trade wars as we know it a couple of years ago, which started US-China, COVID this year, the discontent had started coming through. This sort of what one would call social politics was seeping through very, very rapidly. The election of Trump was a start, Brexit, and the rise of China, and China asserting itself more and more, policies like the One Belt, One Road, and some of the more aggressive stance in South China Sea started positioning this great divide, friction to be caused. And, we started seeing, as I said, the trade war discussion barriers well before COVID started. COVID came, huge game changer in February. Economies crashed, black swan event, huge amounts of unemployment, destruction of demand. Governments have pumped in huge amounts of money to subsidize and keep economies going, supply chains destroyed. And, what the longer term effect of COVID is going to be, we don't know, but clearly lots of changes on the economic side. Clearly, on the other side, it has accelerated a lot of other changes, the adoption of technology, the more entrenchment of social politics, geopolitics has come right in the front. The sort of distrust between US and China is really come to the forefront. Only last week, Secretary of State Michael Pompeo almost made a speech declaring the start of a new Cold War between US and China, and it really showed that the relationships had come to the bottom. Only difference this time, the Cold War is very different to the US-Soviet Union Cold War. This is, China is very entrenched into the relationship with the US and the global economy. So this Cold War is going to be incredibly difficult. But clearly we can see now that being anti-China in the US is an election platform. Both Trump and Biden are fighting on the same thing: who's going to be tougher with China. So my hypothesis is the social politics, this unemployment, the wealth divide has caused a huge uprising in the sort of middle, lower class, working class in the US and in the West to elect more nationalistic right-wing governments who are going to be much stricter on this, tougher on this relationship. And we are going to, what is happening today, this divide between US and China is only going to get worse the way I see it. It's going to become more and more bipolar world where either you take the US stand or support China. Now, clearly what we've learned from this Cold War, COVID, has been that, everybody in the West is looking at their supply chain. China is their factory. They're so dependent on it. So the discussion more and more is onshoring, reshoring, diversification, risk management, how do you have resilience in your supply chain? And incentives being given, Japan incentivizing their companies to bring factories back, exactly the same. So all of this is really, in my mind, a reversal of the globalization, which we have benefited from in the last 20 years. And as I say, this intensifying Cold War is going to be expensive. It's going to make recovery from COVID a lot more harder. And, the reality, as I said before, I see globalization was the reason globalization is dying now. I mean, the rise of China benefited from globalization, but the growth of China in itself has caused this problem. And I think this reversal has come. We are starting to see the end of globalization. Thank you.
Thank you, Arjun, for such a very, very interesting presentation. I have one question. What role does COVID-19 in the march to the end of globalization, in your view?
Professor, my hypothesis was this was going to happen. This great divide, bipolar world was going to happen almost inevitably as China became more powerful, both economically, industrially, militarily. This was going to happen. I think COVID has just accelerated it, put it on steroids. What happened in the last 3 months was probably going to take 5 years to happen. This huge unemployment, huge loss of wealth, huge distrust, and in the sort of developed world, in the US, is just accelerated what we thought would happen over a 5-year, 10-year period. So I don't think COVID itself has done anything. It's just, and we just start from a much lower base, much quicker, and this was going to happen, in my view, in any case.
Thank you very much. Thank you. Looking forward to continue the whole discussion. George Karageorgiou now.
Good afternoon, everyone. Professor Gramenos asked me to talk to you about the changes that COVID-19 brought to the way that we used to work by introducing remote working and some of the effects that this new norm will bring in the economy and our society. I will start by telling you that the global workforce is about 3 billion people. So you can imagine what the implications are or will be in a global scale. The most apparent, and I would have to say astonishing observation, is how resilient the whole work system proved to be during the pandemic. During its worst phases, we had entire businesses and entire business sectors that collapsed out of the introduction of restrictions or lack of demand. But for those lucky ones whose businesses did not collapse, we continued to work in an entire new way from a remote location, while actually productivity increased. How did we manage to do that? Well, we were able to do it successfully because the technology required for this already existed. We had the internet, mobility had already been established through the use of the smartphones and the personal devices. Cloud IT services were in an advanced state already, and the creation of metadata was well underway. I remind you that it is the metadata that foster the use of machine learning and artificial intelligence. COVID-19 brought many changes in the way that we work. Take, for example, the way the ship management business was affected. We went from working in the office to working from home, which was a new norm for all of us. We stopped receiving visitors, and online platforms such as Zoom and Microsoft Teams became the main communication and productivity tools practically overnight. We stopped all traveling and started attending online meetings and virtual conferences. We were kept informed as to how the industry is coping by webinars and quickly learned new skills by attending virtual classrooms. We learned to manage our people effectively without requiring their physical presence. We kept the vessels operating by initiating remote inspections and audits on board the vessels through the increased use of digital tools. We learned to cope with the issues presented by the seriously affected airline and logistics sectors, even though we still face a very hard battle on changing the crews on board our ships. And we finally had to adhere to the new hygienic and social distancing rules that have now become also the new norm. The results, were obvious. The pandemic has accelerated the uptake of remote technologies and the trend towards increased use of automation. The efficiency has increased and the costs have decreased. But does this mean that we can work like that from now on? I'm not sure yet, as the introduction of remote work will bring disruption on the way that we work and live that we have not yet experienced. The new norm for our work life is that distance no longer matters. Will this new norm bring the demise of the office or its reinvention? My view is that we are in the beginning of a transformative era that will change our current perception of how we work. For many years, the EU employees who worked remotely from their home accounted for approximately 5% of the workforce. Suddenly, we went from a 5% percentage to 100% practically overnight. This is a very big change. 50% of the employees who experienced working from home during the pandemic have expressed the willingness to continue to work from home in the future for a number of days in a week. We have many studies now that indicate that between 25 to 50% of the jobs in the US can be performed through remote work. I read a couple of weeks ago a recent poll indicating that many US employees would accept an 8% reduction in their salary if they were allowed to continue and work from home. Working from home means no commuting, which saves approximately 2 hours every day for each one of us. And these 2 hours can be spent with the family or with work, depending on what we decide. One question that I really, have not yet addressed is whether remote working will also result in flexible working. If that is the case, then what will be the new norm? 1, 2, 3 days every week in the office, or not at all? And if you can work, 1 or 2 or 3 days away from the office, why not work permanently away from the office? Let's see now how, working remotely affects some of the sectors that are very critical for our economy and our society. Remote connectivity has become an absolute necessity, and we now have increased need for foolproof communications, cybersecurity, and digital money. What changes, will these developments bring to the traditional banking system? Obviously, we will probably need less and less banks. What about the implications on the commercial real estate? If we have less people in the office, we need less office space, and therefore we have lower rent expenses, lower office expenses, and probably that will result in an oversupply of office buildings. What effect will this change bring to entire regions like the City of London? Let's talk about the residential implications now. These are also very serious. If you can work from home and you're not required to commute, why should you live in a city? And why can't you choose to live in a village or in a small city, or even another country that you like? What implications does this have, for future urban planning? And what about the migration of skilled digital workers in attractive jurisdictions that have a very nice climate? And Greece should be a primary beneficiary of such a development. Let's move now to the implications on corporate traveling. Estimates are telling us that the new norm for corporate travel will settle at a 25% reduction from last year levels. What is the impact on the airline industry, where corporate travel accounts for about 1/3 of that pie? What about the airports, the hotels, the conference organizers? What about the fuel and the transportation providers? Huge disruption will come to these industries. I need to point out here that I intentionally left out the tourism and leisure sectors, as these fall outside the topic of work. What about, ancillary business services like tax advice, compliance, or accounting?
Giorgio will have to accelerate a bit.
I'm finishing in a minute.
Yeah, thanks.
If you're not obliged to hire from your own geographical area, this increases your talent pool and lowers your employment cost. What happens if you can obtain services from a lower cost region if the talent and the skill exists there? Will work shift from the developed world to the emerging countries? I believe that countries like India and the Philippines will suddenly receive increased demand for the provision of such services through remote mechanisms. What are the effects on the climate change? Well, less commuting means less corporate travel, less office buildings means reduced carbon emissions, cleaner cities, and greater political willingness to move quicker to a decarbonized world. Up until now, we always associated climate change with expensive investment. But look what this behavioral change, working from home, brought to us. I strongly believe that one of the biggest changes that COVID-19 brought to us is the way that we address sustainability and the urgent need to reverse the rapidly progressing climate change. We also have to face social effects. In a rapidly changing work environment, people will need to reskill continuously, and lifelong learning will become the new norm. Adaptability will become the most important skill. Remote work favors skilled workers, which will result probably in a rise in inequality as people without digital skills will not be employable anymore. Another social effect is the blurred line that will be created between work and home family life that will need to be redefined, and new boundaries will have to be set in order to achieve a new balance. Finally, the employers will have to play an expanded role in their employers and their employees' financial, physical, and mental well-being, as this will become a very important factor in the decision process of the employees when searching for a new job. Before I finish, I would like to briefly touch upon the effects that COVID brought on education. And education is very critical because without it, you will not be able to work in the future. With COVID-19, the education delivery mechanism in the Western world went from 100% physical to 100% online in a matter of days. And now people realized how slow and expensive the system was for the last 100 years. We need to change that. If we couple that with a tremendous amount of new demand for education coming from the emerging countries that cannot be catered by the existing number of physical universities, this can only be satisfied with the full online delivery, which will become the new norm in the sector. Online universities will be created that will compete with the established institutions that we all know, and the established institutions will have to adopt their offering in order to survive. Professor Gramenos, I think I have exceeded my 4 minutes, and therefore I would like to stop here and open the floor to any questions that you might have.
Not now, later on. So we'll go ahead now with Jay Zhu. Jay Zhu, as I said, joined the course in 2000, the Shipping, Trade and Finance. He's the Deputy Managing Director of Welton Hag Holding, and he's based in Shanghai. Jay.
Hello, good day, my classmates, course-mates. Good day to you. The topic I'm going to talk is RNG, a new chapter in China. I select this topic because I'm actually a newcomer into the RNG field. For the time being, I'm actually still in the beginning stage of getting familiar with the terminologies of RNG. The reason that for me to enter this new challenge is because my company is recently close to get a deal with one of the largest oil major in China. We're going to build an LNG terminal together in the Zhoushan Island. This location is only 11.8 miles south of the Yangshan port, which is the largest container port in Shanghai. Our project is going to have 2 phases of construction, which totally cost 8 years. The first stage will be finished by 2004 cost about $1 billion with a capacity of 3 million metric tons per annum. And the second stage is about $1.6 billion investment with another 6 million metric tons per annum. On top of this investment on the LNG terminal, we will have approximately the same amount of investment on the ships. LNG in China actually start from year 2000, which is the same year that I joined the shipping trade finance course. Before 2016, the development of LNG is in moderate speed. Start from 2017 up to now, this market start up. And in next 10 years, the total amount will be tripled. So in the beginning of the year 2000, the iron ore demand and other raw material demand in China give us a super boom shipping market. Probably the LNG demand in China will lead to another wave on the LNG market. The LNG demand in China is actually oriented by the Chinese government. For example, in recent years, especially in this year, of this pandemic virus, we can saw a lot of new policy into place. In my account, it's almost 2 policies per month that all encourage LNG market. So we have this big demand in the LNG, but we still have not enough LNG ships. The LNG fleet in China accounts only 3% of the world. In comparison, Japan is almost the same quantity of the LNG importer of China. The Japanese LNG fleet is about 60.5% of the world total. China in this year already become the #1 importer of the LNG, and we think the quantity already surpassed Japan in this year. So we have this huge demand, and it will continue. There are LNG ships shortage, as well as the experts in the LNG field. We have huge shortage. Now, for example, I have 3 degrees in the shipping university in Shanghai Maritime, Dalian Maritime, and Cass Business School in the shipping trade course. I can find a lot of names in the shipping market. However, when I have to face this LNG project, I try to find out where can I get friends to help me. There are only 2 names jumping into my mind, and these 2 gentlemen, I'm not very much close. So I think this is the situation on the Chinese market. There is a good market ahead, but in the shipping field, we are not ready yet. There is another strange thing. LNG is become more and more popular worldwide, but in China, it is only something new. A lot of people, for example, common people like me and other shipping people, even a lot of Chinese government officers, they think LNG is a dangerous cargo. Everybody try to keep themselves away from the LNG because nobody want to get involved with the trouble. But actually, it is not correct. LNG is actually a very safe primary energy resource. Okay, before I finish my speaking, I want to tell our friend, China will become the biggest LNG market in the near future. So there is a good opportunity ahead of us. Thank you.
Thank you. Thank you very much, Jay, for a very, very interesting topic and presentation. I see that there is already one question, so then you will answer at the end with the other ones now. Since the time, passes by quickly. Thank you so much. And the next one is Urvashi Zutshi. Hi, Urvashi, welcome. Your topic is changing landscape of banking. I will repeat again, she is former managing director at ABN AMRO, and she joined the MSc in Shipping, Trade and Finance in 1995. Your topic, your speech is what? Is changing landscape of banking, right? All right, Urvashi.
Thank you, Professor, and good afternoon, everybody, and special good afternoon to all my classmates who have joined. Thank you guys for joining. Professor, I'll try and make up time for you because I speak very fast. So, as Professor said, I'm going to talk a little bit or share my thoughts a little bit about the changing financial landscape after COVID. So I think all of you guys have been around for a while and know that banks entered 2020 with very strong balance sheets and very strong financials and good equity positions and solvency positions. And one of the reasons for that was that when banking went through its last crisis in 2008, it was a right mess. I mean, that was a difficult time. And so the regulators realized that banks' balance sheets and their equity positions were extremely poor. So they put a lot of conditions on banks and what kind of equity ratios they needed, what leverage they needed, et cetera, et cetera. So the good news is 12 years down the line, banks found themselves financially doing well, and financially, while the interest rates have been low, at least their balance sheets have been strong. Interestingly, today in 2020, banks are actually at the heart of the government's effort to prop up economies as we go through COVID, or actually I think we have probably a longer time to go, but as we start to go through it. And I think banks are really being called upon to solve the crisis that we find ourselves in, or rather households and economies and companies. In fact, there was a statement this morning, and I'm going to read it, by the ECB, and they said, the sole focus of banks should be on lending and loss absorption and not on dividends and profit making, which is actually interesting. And I think we all know that the creditworthiness of banks is really a function of the economies and the customers that it tries to finance. So I think now a few thoughts. That's where banks were, strong balance sheets. We are in January of 2020. Every single government across the world has completely shut down its economy. What does that mean? You've seen Delta being bailed out. You've seen 5 companies in Chapter 11 every week. It just means these companies have no cash flows. They have absolutely no way to service their debt. And when that happens, it's obvious that the non-performing loans on the balance sheet of a bank start to increase. And when that happens, it eventually ends up in its equity position, its solvency position, and that just means the balance sheet of a bank weakens, and that just means you're back at where you were in 2018. Now, over the last 3-4 weeks, I don't know if you guys have followed, but a number of American banks have come out with their Q2 financials, and you see in there that their non-performing loans are extremely large. And I'll read out 2 statistics for you. That loan losses for American banks are going to be 12% to 13% of their loan book. That is huge. And the EU banks are expected to face loan losses of about 800 billion over the next 2 years. In addition to the low interest rates, which means banks have lower margins, it just basically means that the financial situation of banks is going to start to look not very good. So we come to a place where we have a weak balance sheet, probably. We have probably limited capital and hence challenges to capital allocation. And then the other big question, and this has been a discussion already for a while from shareholders, is there are certain industries, parts of shipping, parts of energy, which I think is of interest to this crowd, are not considered most sustainable. So the question is, when you're a place where you need to start allocating capital a bit more carefully, are those businesses banks want to finance? The shareholders are putting pressure on them. Does that mean it's going to change maybe the business mix of what banks finance? In the short term, what we've also seen is that a lot of regulators are trying to relax some of the regulations around capital buffers that banks need to maintain. So I think the question for all of us is, what's going to happen to banks? Probably in the short term, they will be okay because they come from a pretty strong place. But the question is, what happens to them in the medium term, longer term? And do we come back to where we started in 2008, where banks have been put under so much pressure to finance the terrible place we find ourselves in, that you go full circle and are back at 2008? Just something to think about. That's it.
Thank you, Urvashi. Very, 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 very interesting presentation. But from the questions, I have already one for you, and then I will continue with the others. Will the business mix of banks change after COVID? What do you think?
Professor, I think it's a huge question, and I know it's a discussion now in a number of banks, because I think what people saw, and George alluded to this, people have started from home. People are not flying because, people are working from home. And now you've noticed that the carbon emissions went down, as George mentioned. The price of oil fell. People in China and India have realized there's much less fog. So after having gone through COVID, people start to think, okay, what are we doing with the energy? What are we doing? Why are we doing what we are doing? So I think this has already been a discussion before COVID, but I think people have seen the reality of this discussion through this time when such a lot of economic activity has stopped. And banks have already been in pressure by shareholders about this, because these are businesses that are not sustainable. Should we finance them? Is it profitable? So I would not be surprised if some of it changes. Also, if the balance sheets of banks become a bit weaker and then they need to allocate capital and they have pressure from shareholders. I don't have the answer. I don't have the crystal ball, but I would think something will change, will have to change just because of the pressure.
Right. Thank you very much. And let's start again. Can we see the gentleman, the Asaf, George Karageorgiou, Jay, Arjun, Arjun Batra is around.
I'm here, Professor.
Welcome. Now let me see what questions we have here. Right. There is an observation from Suanita Albuja. Health has to be global before we will go global again. Health has to be global before we'll go global again. All right. I have here from another graduate, Lorenzo D'Amico. Good day, everyone. Thanks for organizing this seminar. In respect of the topic proposed by Mr. Batra about end of globalization, how much of this war is brought ahead by President Trump? Would you consider a change should Biden win elections? Where do you think Europe places itself in the game Cold War between the two superpowers, US versus China?
Professor, should I take that one? I think it was directed at me.
Yes, and if there is anyone else who would like to reply to this, but it is addressed to you first.
Yeah, I mean, I think when I look at the platform now, both Trump I think, Trump was elected on this originally, but if you see Biden's also, his platform is now very tough on China, and he is talking the talk. I think the issue really is both the Democrats and the Republicans have to understand the social politics pressure coming from effectively the defranchised people, working class in the US. US in the last 30 years has gone through a huge deindustrialization, and this is the same in Europe. There are huge numbers of factory workers who were, middle managers, middle income people who have lost their jobs. The US says it may, 14 million jobs were created from 2010. 90% of these jobs are really Uber drivers, Amazon shelf packers, and that sort, $12 an hour, $15 an hour. So it's a full generation of middle-class workers have lost their effectively livelihood. I think these guys are very powerful. They were not powerful because they were all fragmented. But now that opinion has come together, I don't think any politician can ignore them. I suspect, and that's the US, I suspect in Europe, UK is probably very, very similar. Brexit is a reflection of it. But I think similar is happening in Europe in some form or the other. The only thing in Europe, by and large, the safety net is much higher than it's in the US. So it is not as stark as it is in the US. But my view is the social politics is a very powerful engine. And, it's reared its head in the US first. And suddenly people, the working class, have realized that they have the power of their vote. So this is not going away in my view, Lorenzo. Thank you.
Thank you. Is anyone else who would like to contribute on this? Or anyone else of the speakers? I suppose no. All right, I go ahead with a new one. Vesam Abu Al-Khawm. Many thanks for organizing an excellent assault. I have a question for Mr. Batra. Have we moved from global to local, or there is a new form of globalization, digital one? And if so, what are the opportunities? Kind regards and stay safe. And this question could be addressed to the other ones, to the other speakers. So,
if I may say something, Professor, this is George.
Yes, fine.
I think I can answer on the second part of the question, whether we are moving towards a digital globalization.
Yes.
I believe that, we are, moving towards that direction. And eventually, as in the 20th century, we moved to the lowest cost producer, I think we will now move to the digital lowest cost producer. And if that is the case with emerging countries, I think we will see more and more of that happening. Of course, there are political issues that need to be addressed, and Arjun talked about them earlier on. But if the alliances are formed within these specific areas and groups, I think within the groups we will have, this digital globalization occurring. One such example is what we are witnessing now with 5G and the big fight between US and China. You've seen that Europe has aligned its position with the US, excluding the Chinese from that process, and China expanding its influence in Africa and the whole of Southeast Asia.
Fine, thank you. Arjun.
Yes, Professor.
Are you going to address this question? So should I repeat it?
No, I can see the question. I think George has answered it, I think, quite adequately.
All right.
I really have not much to add, but I think there's, in all change, I think the question was, what were the opportunities? I think the wonderful part is we are not naturally bipolar. I think, if we are able to see the world for what it is, opportunities have to arise for those who are willing to take the opportunity.
Oh, all right. Anyone else who would like to add on this?
Maybe just a small comment from me. I'm not as pessimistic, I think, as some of the fellow panelists on globalization. I think we will go into an era where countries will be much more critical about the benefits that they can receive from certain trades or trading. I still think we're going to trade. Countries may go into a certain area where they keep national security interests more relevant and more highlighted, but I think countries will inevitably come back to this story.
All right, thank you very much. We go to the next one. From Dimitra Bukhari. Mr. Batra, how do you associate the collapse of globalization with the increasing power of China?
Yeah, that's a very interesting question. I think my hypothesis is the rise of China is just a fact. I think the issue really is the other way around. It is where the working class in the advanced or developed world have been disenfranchised, where they have lost. It is not, if it wasn't China, somebody else. Maybe now, when China has become so powerful and strong, there is a fear element of it. But I think the start of it wasn't because China had got strong. It wasn't a jealousy of China. It was just so many middle-class people have lost, or their livelihood has deteriorated in the last 20 years of globalization. So it was their own particular situation which has caused them to vote and become much more nationalistic and protectionistic rather than the fear of a strong China.
Thank you. Then the next one is Snorre Hamero to Urvashi. How close are we to a new Lehman Brothers after we finish kicking the can?
I think we probably, hopefully, although bankers have short memories, they say, I really hope we've learned something from Lehman Brothers. So I would doubt it. I think the financial banks are way financially stronger now than they were. And I think they've been regulated so much over these years that I don't think this happens very quickly. But you probably might have weaker banks being taken over, because I also think a lot of the markets are very overbanked, which is why also banks don't do very well, because then the margin pressure is very, very high on banks. I mean, if you look at a country like the Netherlands, it has 3-4 large banks with 17 million people. I mean, it's a lot of banks. So you could see consolidation, but a complete collapse, I don't think so. I would think banks and regulators learned something the last time around, or I hope they did.
There is one more question from Vivek Srivastava, and is to Urvashi and perhaps George and Asaf. Are banks now pricing risk in the shipping industry correctly?
Vivek, what work do you do? Look, I think banks, the problem is if you're not a banker, it's very difficult to understand why banks are always so expensive, quote unquote. But I think what one doesn't realize is that a bank needs to get a minimum return on equity. And if you add on the cost of regulation, the cost of compliance, the cost of sustainability, the cost of COVID, I mean, I guess if you're a client or in the shipping industry, you just think the bank rips me off, which is a normal complaint I've always seen from clients to say, why are you guys so expensive? But I think when a bank prices risks, it's because it has these internal models and then it has to get a certain return on equity. So I would say more or less banks price risk correctly. In fact, often I think they don't price it well enough sometimes because of the competition that they face from everyone else in the market or other banks in the market. I don't know how the rest of you guys who are on the other side of it see it.
So gentlemen, what do you think? We can't hear George. George.
If I may answer this from the ship owner's side,
Yes.
I would turn around the question. I would say, you know, is shipping generating the required returns for the risk that we're taking? Not whether banks are charging us, you know, enough for the money that they are giving us.
I join George's question there, and I'll add another comment here. Yeah, it's not really for our position to say, but knowing how banks work and speaking to many banks, it's hard to generalize here. You have different counterparties and different assets and across different asset classes and different places in the cycle. So I tend to hope that the banks are pricing correctly. We've seen maybe some events in the past that some people would argue differently, but I think at least in comparison to 10, 15 years ago, it seems some banks are learning their lessons, I think.
Thank you. One question from for Jay. Yes. How many LNG terminals are in China now, and how many in the future?
Well, let's say in the first 15 or 16 years from year 2000 till 2016, the total LNG terminal in China is 13. And in the past 4 years, there are 9 being finished and into progress. So far we have total 22. And right now, there are 13 in construction and 26 in projection. So by 2070, no. In next 10 years, we will have total 59 LNG terminal all in China. Just in comparison, in Japan, which is the mature market, they have so far 36 or 37 LNG terminals.
I see. Thank you very much. Thank you. Now, what do we have? Iakovos Bazinas. A question for Mr. Karageorgiou. You briefly mentioned the effects of the current COVID threat with regards to sustainability, decarbonization, and environmental protection. I would like to ask you to expand on this subject, if you would specifically. Do you see any direct or indirect influence this might have towards more sustainable and environmentally friendly energy solutions, assuming that one of the effects of this pandemic is a greater awareness of climate issues? Or do you believe these will limit it to behavioral change as a result of our, let's say, immediate needs? Will there be a chain reaction that will follow? Thank you.
Well, I strongly believe that the behavioral change that we've experienced through the pandemic will help a lot moving towards a more sustainable future. The politicians have experienced and seen that the citizens like cities that are clean, without a lot of cars, and they now have, for the first time, a lot of money to throw towards this direction. So I believe that we will see substantial changes, both in the environmental regulation, and also substantial amount of money being thrown towards the environmental cause in order to lead to a more sustainable and environmentally friendly future.
Right. Anyone else who would like to add something on this?
Yeah, I agree with George. I think the consumer has become much more environmentally conscious. He wants better environment. He's seen better environment. If you look in India, China, as Urvashi said, I think that the only problem is, up to now, the consumer has always wanted the cheapest of everything. Price has been a huge issue. So I think the difficulty is it's a double-edged sword. I mean, we saw the price of crude oil collapse, and with it, it's probably taken all the renewables back 5-10 years, because the growth of the renewables was so dependent on, it had just about managed to be economically competitive with carbon. And then suddenly the price of crude collapses. So it sets back this transition. So I think the governments have to interfere and put regulatory barriers which make it harder and harder for some of the carbons to compete with renewables and sustainable. Otherwise, if you leave it to pure economics, it's circular. The less carbon you use, the price will fall. It just delays the economic changeover.
Right. Thank you. Should we go for the next one? Right. Ebru. Welcome. Welcome, Ebru, from Istanbul. Thank you. Great to see you. My question is, with the deglobalization, should we expect small local regional groupings of country? Best regards, Ebru. So, what do you expect?
Well, if my answer would be, I think it is natural. I think the two elements of deglobalization at this moment is, besides deglobalization, is onshoring, nearshoring, and nearshoring by definition means to source closer than you did before. So closer really means closer in the region. So I'd imagine US would depend more on Mexico, even though Trump is going to put a wall across there. and Latin America. And, you know, we can see intra-Asia trade growing very, very fast, intra-European trade. So yes, I do believe regional trade will replace some of the long-haul trades.
But also, if I can add, I think one of the other things is that we talk about globalization or deglobalization in this very large context, but you can also see it as certain things which are essential to the survival of a country. For example, we saw this pandemic, and then you would think, you know, food hasn't been that much of a problem. It's been a little bit of a problem, but everything around medical supplies has been a problem. So you can also say there'll be probably certain sectors which are considered absolutely critical, which you probably want to keep closer to home. And maybe other things, you know, which are not that critical for your survival, if they are not so close, I mean, everyone still survives. Just a thought. Like, it doesn't have to be for absolutely everything.
I fully agree.
Fine. Next one. Max Day. My question is for Urvashi. There has been discussion that US dollar will lose its global reserve currency. What are your thoughts? Thank you. I think the other may reply.
You know, I find that I find that difficult. It would be nice if that happens, if I'm totally honest. But I think it's very difficult because absolutely every single commodity and everything we do in US dollars. So I think to completely unwind that, the euro really doesn't have the reach that it could have had, it should have had, because I think there's 27 countries here that are sort of, you've seen, it's a bit of a mess as well. I find that difficult to comprehend. It would be if there was some competition for the dollar, but my own view, I don't see that happening in a hurry. I mean, there was a while where, you know, might have been the RMB, but I think a lot needs to change, or maybe seeing the way things are going in the US, and if they continue that way, I really hope not for another 8-10 years, maybe that happens, but it's, I don't see it. I don't know what you guys think. I find that quite difficult because we do absolutely everything in dollars in terms of running the world economy. And
I totally agree with Urvashi.
Sorry, you agree or don't agree?
Totally agree.
Okay.
Totally agree. And you know, for ages, the EU, Russia, and China, and the Asian countries tried to move away from the dollar, and every time that was unsuccessful. So I think it's extremely difficult to move away from it. And I know that there are some people who are worried because the US is printing a lot of money, but I'm sure that they will find a way to, you know, collect it back when the right time comes.
Anyone else? No. The next one. Juanita Albuza. I just flew from the Caribbean to Spain and from Spain to Holland. I just saw many ships, cruise ships and oil tankers really parked in from of Rotterdam. I see this is as a future revelation and agree with some of George's presentation. The infrastructure of the travel and oil industries have changed. We are going digital, then LNG will be needed, but, capital letters, but, others might be needed to result. Cruise ships, airports. Now, your views. Any views? Do we have anything on this?
I just say probably, I guess the ships are, oh, sorry, George.
She said that she agreed with, you know, what we just said, so. what else can we say?
Yeah. All right.
I was just going to try to guess the type of ships, maybe some floating storage, some containers laid up.
There are a lot of cruise ships which are laid up, and there are also some container ships which are laid up. Not a great number of container ships. I think the cruise industry has the biggest problem, and I don't see that recovering at least for another year. But slowly, let's hope that world trade will resume, and eventually both the dry cargo ships and the tankers and the containers will resume, working at their full capacity.
Right. Antonio Ferreiro, for Arjun, do you see what you described as a situation in Singapore being somewhat replicated and worsened in Hong Kong, considering the importance of expats and both being international financing hubs in Asia? Or is the current China, thus Hong Kong situation totally destroys the outlook of Hong Kong reviving its status in the short term?
Antonio, I'm not, I'll assume what I understand from that question. As you know, I'm based in Singapore, so I'm biased towards Singapore. I have some doubts about Hong Kong for various reasons. I think Hong Kong was incredibly important to China as their window to the world 20, 25 years ago, and that importance has slowly diminished. And now I would imagine China would prefer the window into China to be onshore, Shanghai, Shenzhen, Dalian, it doesn't matter. I mean, we as a consultancy are very often asked by a number of the maritime centers in China, how do you make X place a global maritime center? So my own view is that China doesn't need Hong Kong as much as it did before as an international finance center. To be honest, when you see some of the tax issues they're raising with local Chinese nationals, I would imagine actually Hong Kong has been a channel for money to escape China rather than come into China. So I suspect the longer term perspective is that we will see much more developed onshore windows into China as international finance hubs, and Hong Kong will diminish definitely for the expat community. Yeah, Singapore, yes, I suspect at this moment banking is on a down due to COVID and structural changes. So, expats are leaving here. I suppose that's restructuring of anything, but Singapore still remains a premier international financial center in Asia, that's for sure. So I don't know if that answers your question. Asad, you might have a view on that.
Yeah, maybe. First of all, I agree, Arjun, with your point about the significance. There's no doubt Hong Kong is less significant than China than it was in the past, and a small metric maybe that gives this quite clearly shown is that around 20 years ago, the ratio of the Chinese economy versus the Hong Kong economy, Hong Kong was about 1/4, 25% size of the economy. And that even was, I think, a little bit higher. Whereas today, the Hong Kong economy is around 2% of the Chinese economy. So no doubt the comment is correct. I'm a little bit on the other side and biased towards Hong Kong after growing up here. I do have confidence in Hong Kong as a business hub for expats going forward. Obviously, there's still a lot of questions that will need to be seen how are they are implemented and enforced, points that I raised. But you know, I ask myself even today and after the recent developments, and I don't need to answer, but I ask kind of a rhetorical question: Does Singapore have more freedom than in Hong Kong at the moment? It's not a difficult. It's a very difficult question, I think, to answer. Probably has different angles. To be honest, I think both will continue to lead respectively in their places. I do think China has an interest to keep Hong Kong strong and have a hub that is not Shanghai and so on, strengthen Hong Kong. Let's see.
I think if I can just add one thing, I think both of you are talking about Hong Kong from the way China sees it, but I think the way everyone else saw Hong Kong from the outside was, well, we don't want to deal with China because, you know, that has no rule of law, that's communist, whatever else you wanted to call it. So if we want to do business there, we are either in Singapore and Hong Kong. And I think Hong Kong did more IPOs than the Singapore did. So I think it's more about what happens, more how the outside world says, okay, flip, if I want to do business there, where do I go now? Because if I don't want to go in China, because I'm not sure I trust everything that goes on there, then Hong Kong was the place. So sometimes I think it's probably more of a loss for everyone else than maybe for China, because like you said, it's very small part of China now. So anyway, just a thought.
Jay, would you like to add something, or it's okay?
I think everything said more than enough. I have nothing to add.
Fine.
But as a Chinese, in my personal experience, I didn't go to Hong Kong in past 10 years. So I think from our point of view, Hong Kong is no longer that important compared with 20 years ago. And also in the shipping market, Hong Kong become much, much less attractive. At least I think everybody prefer go to Singapore instead of Hong Kong when we talk about shipping. Sorry, Asaf, not for you.
No problem, Jay. That's okay.
Thank you.
Or there'll be more space here in Hong Kong to find a car park.
Yeah.
Doug is here. Doug Lilletved. This is a question to Urvashi. Based on emission reduction targets from EU and others, going forward, do you see any change in financing appetite on type of fuels that new build ships are built with?
I think I already said it in my presentation that I think there will probably be changes because the pressure is just so strong. You've got Greenpeace and all these other lobby groups chasing banks because, you know, banks have created all sorts of crises, which is why I'm quite glad this time banks are being used to solve a crisis, which is a nice change because otherwise banks are always the sort of demons that create all the crises. I think there will be changes, but I think Arjun mentioned that earlier when he was talking. One of the things is, of course, that the good news was with high oil prices was that things that were renewable, things that were green, etc., were, you know, become something that people want to then be using as well because, you know, the other thing is so expensive. Now, when everything crashes, it again becomes more expensive. So I think as time goes by, you will see some changes, but I'm not sure how quick and how fast, and that really depends on what prices are doing.
If I may add something here, I agree with Urvashi, and we need to remind everyone that shipping is governed internationally by the IMO. If the IMO doesn't move, it will be extremely difficult for any other body to move, whether it's the EU, the US, China, whatever you want to call it. You know, shipping is an international business, and it's the only business along with aviation that is governed by the IMO directly. So, you know, let's not forget about that, okay? It's a very important point. And politicians are the ones who really, take the decisions within IMO.
Anything else? No. The next one.
Isn't it time, Professor?
Just 2 questions, and I think we have to finish. Is Dr. Papapostolou. Nikos is the new director of the MSc Shipping, Trade and Finance. And he has one question for all panelists. Since 2009, we have experienced massive quantitative easing by many central banks. The quantitative easing seems to be even larger at the moment. What are your views on this tool as a remedy for helping the economy? Have you noticed any effect on the shipping industry? Or do you think it's just out there for pumping up the stock markets only?
I'll take a crack at that. It's a good thing is to listen a bit to look at the mandate of the Fed, and it came up recently in the past weeks. What is actually their goal? What do they need to do? And their mandated goal is to assist the economy, the people of the United States. I think in crises like this, you need to pump money, because in the end, the people who are suffering, not us, right? Probably not the people who are listening in, but many people who are suffering these days, their suffrage is immense. I mean, for food, for risk of being homeless very soon. The side effect of that can be, and look at the S&P 500 and the tech shares going up immensely, but there's no other choice. Money has to get quickly to people who need it.
I think it's the same in Europe. This is just not a US thing, right? Look at the amount of
money globally.
The EU's pumping, because I don't think they have a choice. And with interest rates being where they are, I think there's not much else, I think, that anyone can do. Of course, the question is, it's free money for now, free. Somebody needs to pay for this at some time, and I think all of us will. In taxes eventually, because I mean, it looks like free money now because everybody just prints it, because I think they have no choice, as you say.
Yeah.
I mean, my concern, I don't have difficulty that the intentions are the intention and needs to happen. The intentions are good, but I think a lot of it goes to the wrong place. And if you look at the quantum, and I'm not anything against it. If you look at the quantum, I'm not a great economist. I'm not an economist at all. But my economics 101 said, if you keep pumping money, it can only cause inflation.
Yes.
So, are we, and, lots of people, so either you're going to get hyperinflation if the economy is sort of stabilized, or you're going to get stagflation if we remain in depression for years to come. So actually, in both cases, it's, we are devil in the deep blue sea. And, I don't think we're going, the choices are stark for the economy in one form or the other.
Probably worth mentioning here, Arjun, exactly following your point, there's a major discussion in the US and elsewhere about this modern monetary theory, which I think maybe was alluded to beforehand, of can the US continue printing money and not reach these inflationary pressures or the such?
Yeah, and I don't know the answer, but so you yourself said, okay, it goes into the stock market. So, if I really look who has got rich in the last 4 months, Zuckerberg, Elon Musk, and Benzo. So, hang on, these guys were not on the food line, were they? So, the money is being pumped in, and it's coming out in a different place, isn't it?
Yes, we just have to be careful of the certain trends. The acceleration of this crisis has deep implications, especially for tech companies. We see how much they're benefiting. Obviously, we're generalizing here, but I'm just saying there's many people who need cash today, who are unemployed, who are not getting benefits for to support their unemployment and so on. And I think the stock market you see this disconnect that is mentioned between the stock market and the real economy, and that's pretty prevalent these days.
If I may add the second point of his question, whether we've seen some of that quantitative easing affecting shipping. The answer is clearly no. We haven't seen any of that. And I would have been extremely surprised if that was the case. Politicians do not really, hand out gifts to offshore-based entities. They care about their citizens and their voters. So, they'd rather spend the money in order to give them food stamps and subsidize their living, rather than pay for the transportation of a commodity, which nobody sees, and very few people really appreciate that it happens.
There are many more questions, but I think we have to stop here. First of all, I want to thank you all for the very successful beginning of our online discussion session. A large number of topics cropped up, and certainly we are going to continue our discussions with other graduates, with yourself, as well. It depends upon the topic. So it's time to finish, but before we finish, I would like to hear from each one of you the last word for today. So Arjun, George, Taf, Jay, Urvashi, thank you so very much for what you have done today. And please, the last word for today. Let's start with.
I think my summary is clearly we live in very uncertain times. I think George alluded that we all really need to gear up and be resilient in this time. And I feel the fact that we actually, all of us, thanks to the professor, have been extremely well educated in a very international, global sense, must continue to leverage our network, our knowledge, and find those opportunities which both benefit ourselves and our communities. So I'm not, I can see a world which is giving lots of negative signals, but on the other hand, I think I'm very, very positive that we are all trained and educated to be resilient. So I'm positive.
Thank you. George?
Well, as a closing remark, I would say, that the biggest change that, this pandemic has brought to us is the acceleration of the uptake of remote technologies and the trend towards increased use of automation. This increase in the digitalization of business processes will force entire industries to retool, and that will eventually reduce costs and making technology cheaper and easier to use for everyone.
Thank you, George. Asaf?
Yes, thank you. It's a similar point to what George was mentioning. This crisis is clearly an accelerator. And from my point of view, the thing that sometimes is it's a shame to see is leaders and politicians from various countries not understanding that, there could be these trades of lower globalization may be happening, but global cooperation is still essential to be able to solve these problems, whether it's the pandemic, whether it's innovation and what they do and climate change, these are all problems that cannot be tackled on a national basis. And if we don't have serious global cooperation on these matters, and the pandemic is a great example of this, we're not going to go too far. So I hope politicians around there start working together. That's what we need.
Thank you. Jay?
Gramas, if I could, Professor, just one more point. This also relates to, this also relates to crew change. And this is a crucial matter that, over 500,000 crew are still not being changed on a daily basis, and we need governments to work on solutions.
All right, thanks, Professor. In this year, our life suddenly changed, and there are a lot of things happening to our daily life and to the whole country and the whole world. Frankly, we are surprised, but there's nothing we can resist. We have to take care of it. And when I joined this webinar, I'm so happy to say everything is changing and the world changed a lot. But when I see the face of our Professor Gramenos, there's nothing changed on you. Your face is still the same of 20 years ago when I saw you the first glance.
Thank you. Thank you very much. Urvashi?
I think all I'll probably say is, as everyone else has said, we're living sort of in very uncertain times. And in my view, I don't think banking will look in 5 years what it looks today, or even sooner. I think banks will just look very different. And I think that's a good thing.
Thank you very much. After your presentation and the discussion we have had, I certainly had my views. Most of my views are very similar to yours. Perhaps occasionally I had an alternative view. And this, created something new. We are going to have these discussions because they are extremely useful. But we are going to have short lectures as well, 20 minutes. And what I'm going to do is I'm going to give a lecture on, and I'll kick off at a later stage these lectures. Because we really can expand on these things. And you are absolutely right, the time is very short. But on the other hand, it's good to keep it short and meaningful. I thank you so very much for everything. I'm delighted. And again, once more, thank you for being here. I would like also to thank the ones who attended the event, and also the ones who want to look at the dialogue, at the event, from the recording issue. Finally, I would like to thank Christy and Marlene. They have spent a lot of time. Christy was everywhere, and Marlene was assisting. So we are here due to them. We are here due to our graduates who attended the event. We are here due to you. And thank you, all of you. A very good day. Bye.
Bye-bye.
Bye.
Bye. Thank you.
Bye.
Thank you. Now, where is Christy to tell?